What I really love about investing is its ability to protect your time and your energy. You're able to outsource your growth to a company or an asset that's potentially able to outperform you, that can work relentlessly, that can work tirelessly, especially when you're asleep. Now, I'll get into one of the most interesting, profound insights that I've managed to get from some of the data I've been looking at, which actually shows that trading hours during the night are where most of the money and the growth is made in an asset that you invest in. Now, going back to why investing is so important, it's the fact that when you try and build a company from scratch, you've got to go into cash flow positive after all of the overheads and the expenses to initially start the catalyst for that product or that service as a subscription. Either way, you have to then go through those 3 years of, on average, trying to become cash flow positive. And then when you're cash flow positive, you have to grow that company at 20 to 30%. That's to beat debasement of the currency and inflation, and then also to potentially keep up with the outperforming top 7 companies within the US, known as the Magnificent Seven, who trade on the NASDAQ and the S&P 500. So when you think about the amount of growth that's required from you to start a new company or a business, and you compare that to investing, which gives you the potential to earn that growth through outsourcing your time and your energy to a company that's already got an established product or an asset that's already shown a history and a pattern of being able to outperform on average around those 30 to 60% compound annual growth rate, you really start to understand that investing is a way of protecting your time, a way of protecting your energy, and a way of really being able to have that hard, relentless pain that can come from potentially being an entrepreneur outsourced to a company that have managed to already figure out product market fit and have a plan the next 5 to 10 years. Hence why I love Tesla. This company is a company that have built so many foundations for the S-curves that they're about to participate in. Tesla has shown that they have the foundational infrastructure to be able to dominate the next 4 S-curves that are going to happen across all the major economic zones. You've got electric vehicles, you've got energy, you've got automation of ride hailing, and then you've got the AI and robotics, humanoid robots with Optimus. This data collected by Cern Basher, incredible financial analyst, shows how actually Tesla during the day, Tesla during the night, and then Tesla overall since its IPO, its initial public offering, has actually shown growth only in the after-hour trading sessions overnight. So actually being asleep is where you make the majority of the gains when you invest in this company. So really interesting that you can actually just effortlessly have this company work for you over time. And that reassures people who want to be able to have their time protected, their energy protected. So let's just look at these 3 charts. Chart number 1 looks at the daytime trading hours of Tesla since its IPO. And you can see that in this segment of time from 2000 to 2009, that on a logarithmic scale graph, which takes away all the volatility and shows that the step changes are evenly distributed, you can see $100 has actually gone down to about $80 over that same period of time. Chart number 2 looks at the growth of $100 in just the overnight hours, and actually since the IPO that growth is extreme. You've got, from what I can see in this logarithmic scale graph, you're looking at nearly $60,000 US. The growth of $100 just in the overnight trading hours with Tesla has grown to about $60,000 US. And then as a combination of the daytime and the overnight hours, you've got that growth of $100 growing to about $15,000 when I look at this logarithmic scale graph. What that shows me is that the precise percentage gain isn't relevant, but the overall trend and the overall pattern is that a lot of the money that's made within these companies can actually happen outside of the trading hours, the official trading hours. This can be because important announcements are made outside of the trading hours and the stock can gap up because of that new information that's started to circulate. The stock can actually have massive macro tailwinds that happen again outside of the trading hours when a tweet from the president moves the whole market overnight, and then you wake up and you find that the stock has jumped massively on an incredible announcement that's been made by the Department of Transportation on relaxing regulations for autonomous ride hailing across the United States. And when that happens, the stock factors that in overnight and then actually jumps up and then starts trading at a much higher stock price before you can even participate. So it shows that day trading and having shorter time frames may not actually be as relevant. That over time, at night in particular, when you're not able to participate, is when the majority of the gain is going to be experienced. And that's actually very reassuring because it means that when you go to sleep, you can relax, if you know that the company that you've invested in are building and developing and growing and are going to participate and lead in the future economy, and the asset that you own is going to be able to protect your energy, then there's nothing more exciting and nothing more reassuring than having a company essentially work for you and grow for you. This is why Tesla allows you to sit back, relax, knowing that the engineers and the direction of this company, because of the founder and the CEO, Elon, it's towards the future. It's towards the future market. It's towards the total addressable market that hasn't yet been opened. It's the infrastructure of transportation. It's the infrastructure of autonomous labor. It's the infrastructure of clean energy. It's the infrastructure of energy storage. And it's all of those incredible products that they are building, that they have managed to create and execute profitably. They've managed to vertically integrate their ecosystem to be able to deliver at scale all of these products that are going to be highly desired. And that is what makes me extremely bullish. That's what allows me to feel reassured, especially during those overnight trading hours where the majority of the gain in the company is going to be experienced based on the historical patterns. In this video, I want to focus on the potential discounted cash flow that can come from the revenue source of the future companies. In particular, the ride-hailing autonomous network that Tesla are now about to introduce this month to Austin, Texas, and then roll out and scale to California and other states around the US. Discounted cash flow is going to be, in the next 5 to 10 years, that revenue and that cash that's generated by this business, what's it going to be worth today? If you were able to access that money today, would it be worth the investment of Tesla into this new revenue source, into this new business? And when you think about it like that, you realize the opportunity hasn't yet been realized. Nvidia were a gaming chip company. They didn't show earnings that were going to be 40x what they currently make. They now have, with their artificial AI inference compute, the ability to show 40x the growth of their earnings. That wasn't certain at the time when they were starting to introduce this business plan. This is harboring the potential direction that Tesla's robotaxi service could take, but also the energy, which is also in its infancy, and then the humanoid robots that's going to be even more exponential than the robotaxi and the energy. So if you like anything to do with innovation, if you like anything to do with Tesla in particular, like, comment down below, subscribe, and let's get straight into it. Elon says in a Q2 earnings call in 2024 that if you are interested in this stock and you have built a position in this company, it's only worth keeping if you believe in Tesla being able to execute on autonomy, being able to execute on this ride-hailing robotaxi service that they're about to create. The current business lines that Tesla are generating revenue in are their auto business, their services, and their energy. But that 12 billion isn't going to be what keeps this multiple at the current price earnings multiple that we have of around 188. It's too overvalued. If it's just based on the energy, just based on the cars, and just based on the services, there's something else that's factored into that growth. There's something else that's factored into Tesla stock being in the 300s. And if it's going to go higher, it's going to be based on these next two companies, the robotaxi network and the humanoid robot opportunity. To see where Tesla are going, it's important to look at existing companies that already operate in this sector. So Uber, who are the leading ride-hailing service in the US and across the world, are showing that it's actually quite difficult to make profit. And you can see this financial year statement. They only made about 0.8 in operating profit after all of the expenses, the overhead, paying their drivers, the upkeep of their service, the upkeep of their network. The majority of this growth has come from their ability to rely on the lack of money they made in the past. So they have this tax benefit that made up over 6 billion of their net profit. So being able to reduce their tax because of the fact that they were losing so much money before 2024 has actually led to them having an increased and healthy looking income statement. But actually, they've shown that it's quite difficult to generate profit within this industry. So looking at the current existing model of Uber and comparing it to Tesla, who are able to build extremely low cost vehicles that can operate in this network. They can then deploy existing Model Ys to operate in this network. They're able to make these vehicles quickly. They're able to make these vehicles very cheaply, under 20,000, and they're able to scale this network and potentially charge under $1 and still make money. And that disrupts all of Uber's business model. It disrupts the ownership of cars, and Tesla have a really unique opportunity to be able to capitalize on this market. Another area that Tesla might go into is deliveries. And you can see that growth is happening within this industry. When you look at Uber's growth within deliveries, they've gone from 8 billion to 64 billion over 5 years, from 2018 to 2023. They're showing EBITDA growth, where they were negative operating expenses, to now being over 1.5 billion. So this is an industry that Tesla can also start to take a slice of. And when they do, they'll be able to do it with a much healthier operating margin. This could disrupt a new business model that isn't quite understood and taken seriously by those that make these institutional decisions with what they're going to invest money into. So Tesla just being that underweight stock that actually has so much growth on the horizon. This simple chart by Joe Badgie, another financial analyst who's advised Morgan Stanley and JP Morgan in the past, becoming one of my favorite financial analysts when it comes to Tesla and automotive companies, someone you should definitely follow, is able to simplify this extremely important potential path that Tesla's robotaxi services could take. You can see that green line is Tesla's current EBITDA, annualized, at about 12 billion. Now, when you think about the 3 different types of ramps that Tesla could take their robotaxi scaling, from the blue one being slow, which is a few hundred vehicles, expected being a few thousand vehicles, and then the fast being into the hundreds of thousands, into the millions, going into 2027. But initially, it's going to start off with either of these 3 ramps. If you think about the blue ramp, you're still, as a slow ramp, going to, by 2027, contribute 15% of the EBITDA to Tesla's overall earnings. And then you've got the expected ramp. And again, by 2027, this expected ramp actually starts to overtake in a huge way, by nearly 80% actual current overall EBITDA of Tesla's current company. So 18 billion coming from just the robotaxi network. And if Tesla do what they are very good at, which is break things and accelerate things and execute, scale, the fast ramp takes their earnings before interest, tax, depreciation, and amortization, skyrocketing way higher than their current businesses at the moment. And you can see that green line just becomes a distant memory as their new business model starts to become what they're known for, what they will be known for by 2027. Cern Basher, another incredible financial analyst, his data, someone you should follow if you're in Tesla and you're invested and you're interested in future disruption. He is someone you should follow. He brings this incredibly simplified chart that shows that the first bar, which is the $2.95, is currently what it costs Uber to operate per mile between their driver and their ride-hail operator revenue, the gray and the green. They actually need to charge $2.95 in order to keep this business profitable. Tesla at $2.95 make $124,778. So they're already going to, just charging the same as what Uber charged, they'll make more. They'll grow faster. But if they charge at $2, the red bar, they make $84,595. And now you can see how Uber are going to have to compete, but they're going to start to disenfranchise and disincentivize the driver, because the driver starts to lose out on this. They start to make less, becoming unprofitable, but then the driver starts to make less as well. So you can see that $2 for Uber means that $46,527 is what the driver's going to make in revenue, and they're only going to now make $38,000. And the final red bar is Tesla charging $1.48, and they can go much lower. But if they charge $1.48, this undercuts Uber's model completely, making them unprofitable. They can't compete at this price. But the most important part is the driver has gone as well. There's no need to drive and be involved in this ride-hailing network as an Uber driver, because it's just not worth it at this point. You don't make enough for it to be worth it. You're disenfranchised and you disrupt this entire economy. And Tesla end up monopolizing this opportunity. How could it be relevant? Tesla have the ability to scale a product that will open up a new market, total addressable market in the trillions. This is going to open up opportunities that we don't know exist. The creativity of innovators that can see that the scaling of this product is going to lead to so much more time for people in their cars, curated experiences as people start to enjoy ride-hailing tourism. They're going to have a very personalized experience with the interface of Grok as it gets more advanced and it goes to Grok 3.5 and Grok 4 and Grok 5. You're going to be able to really personalize every single experience of the participants in this robotaxi network. As they enter into this car, they'll be able to load the data that they've already stored within their past experiences of being in the ride-hailing service and curate a path, curate a plan, curate a trip designed for that individual rider. The cost of a mile going under $1 is going to undercut Uber, it's going to undercut Lyft, it's going to undercut Grab, it's going to undercut most of these competitors that currently operate in the US. Grab doesn't operate in the US, it operates in Asia. But if you were to scale this product further, eventually you could start to go into these economic zones and start to potentially disrupt some of these business models as well. So I want to just finish off with two really important charts. The first one is by Sam Basher, and it's basically showing how Tesla, a company who managed to show they could go into the negative for a few years, they turned it around, and then they went into the positive. And these green bars now show their potential year-over-year net growth rate that could come from this ride-hailing service, that could come from all of their companies together. And as a company that's showing growth like this, you can rest assured that overnight you can see growth within your portfolio if you have a position in this company. Not financial advice, but just something to really understand, to consider. And the final one is a chart that I have to zoom in on because it's by one of the most sophisticated financial analysts, again, someone you should definitely follow, called AJ on X. He has this mean reversion chart where you can see the green lines are where it can be very oversold, the Tesla stock, and it can be overbought. And then that red line that you can see just above that, and that red line at the bottom shows the maximum extreme overbought and oversold areas. Tesla can go through these lines, but where you want it to be trading at its fair value is around that gray cloud. That gray cloud is where Tesla should be. And at this moment, it's still a bit higher than where it should be based on its current business models and its earnings from these business models. I hope that you got some value from this video. I hope that you managed to see that overnight is where a lot of growth can happen within your portfolio. And actually, sometimes just rest assured in the companies that you believe in is the best state to be in, rather than trying to day trade and trying to time tops and bottoms. Actually just trying to catch that overall overnight trade and trend over the multiple years that you believe in a company. And as they show growth, objective data that shows quantitative growth, you can just rest assured that your investment is taken care of. So I hope that you got some value from this video. If you did, like, subscribe, drop a comment down below. Thank you very much. See you in the next one. Bye.